When bookkeeping is done right, it feels empowering, it gives you clarity, and it makes your taxes way easier to get done. Like tax season is super, super chill. But when it's done poorly, it has pretty much the opposite effect that leads you to feel confused, stressed, and like that you don't know what's going on. I've been helping entrepreneurs learn how to do their bookkeeping for 6 years now. And in this video, I'm going to share with you 3 common mistakes I see people make with their bookkeeping and how to fix them. And if you're not familiar with me, my name is Jamie. I'm a CPA based in Toronto, Canada, and I'm also the founder of Chill Books. Chill Books is a super fun educational finance course that teaches entrepreneurs the basics of bookkeeping and taxes so that they know the essentials of managing the finances of their business. Okay, let's get into it. The first mistake I see people making is mixing in their home office expenses with their business expenses in their bookkeeping system. When you are claiming home office expenses for your business, you claim a portion of your rent, a portion of your mortgage interest, a portion of your utility bill. All of those things get claimed, but a portion of them, because you're already spending the money on these things. They are personal expenses, and the majority of your home costs are related to you living your life personally. And then there's a portion you get to claim for that home office. I don't want you putting these expenses in your bookkeeping system because they're going to throw off your reporting. So when you're looking at your profit and loss from your business, say your business made $5,000 last month and you had $1,000 worth of home office expenses. Do you really want it to look like you made $4,000 from your business last month? Probably not, because you were going to spend that money on those home costs anyways, regardless of whether you had a business. It doesn't really give you the full story of what's going on in your business. And you want to be able to use those business numbers, that profit and loss, to help you understand what you can fund in terms of your personal life and paying yourself. So when you mix those in, it mucks things up and it doesn't tell you a clear story. So what you want to do is keep those home office expenses outside of your bookkeeping system in a tracker, which inside Chill Books, I give a tracker to my clients specifically that they can use to give to their account at the end of the year. And then keep your bookkeeping system for your business expenses only. Another thing about home office expenses is that when your accountant is filing your tax return for you, they actually fill out your home office expenses in a separate area. So it's going to make filing a lot easier for them and for you when you separate these out. Whereas if you muck it up inside your bookkeeping system, your accountant's likely going to have more questions for you and trying to figure out what portion you put in and if there's something missing and all of those things. So keep it simple. Keep your home office expenses out of QuickBooks, but still give that report to your accountant at the end of the year showing all of your costs for the year, and then they'll be able to claim it and everyone's happy. The other mistake I see often, oh my gosh, I see slash hear, is when people say that they do their bookkeeping in Excel. Excel is not a bookkeeping system. Excel can be used to do tax prep, to slap together all of your numbers for the year and get something ready to be filed, but it's not a bookkeeping system. It does not have the automation that bookkeeping systems have now, where your financial data is automatically brought in and you can categorize it from there. Excel is very manual, which means also it is error prone. Every bookkeeping system has a function built in called the reconciliation function, and that is a separate area where you can go and check your numbers. So it will catch anything that's missing. So if you paid for something on your credit card and you forgot to put the receipt into the system, it'll flag it for you. If you've accidentally duplicated something, so say you accidentally recorded a sale from your client twice, and our bookkeeping system will catch that for you in the reconciliation function. Whereas in Excel, you have to go through every line and make sure everything's correct on your own. And if an extra zero is added somewhere or a formula is deleted somewhere, as you can see, it's error prone. And the other thing is that Excel doesn't have an invoicing function or receipt management function. So when you're using a bookkeeping system, you can either invoice your clients directly from that system so that there's no catch up or organization of sales numbers at the end of the year, or you can integrate wherever you're selling your products or services like Square, Stripe, whatever, directly with the system so that that information gets transferred in. And again, you're not manually adding everything in. But the cool thing is you can always manage and see who owes you what money and that type of thing when you're invoicing through a bookkeeping system. And another reason it's not a bookkeeping system is it as the receipt management piece. So when you use Excel, you are now responsible to keep all of your documents for audit purposes separately, because in Excel does not hold all of your receipts. It doesn't hold all of your invoices to your clients. So it's up to you to make sure that you're keeping your receipts for things in a separate software that is auditable. Excel is just a tool that you can use to add numbers together, but a bookkeeping system has functionality to invoice clients, to automatically bring in your financial data, to reconcile. That is like a key function of a bookkeeping system, and to manage your accounts payable, the money that you've spent as well, so you're not missing out on any write-offs. Oh yeah, and what I wanted to mention too is, like, as a business tool, Excel is not going to support your business. Whereas if you have a bookkeeping system provides you with a full reporting suite so you can see how your business is performing over time. So even if you're just starting out, the really cool thing is, like, if you have a bookkeeping system, you're going to have all of the information from the beginning of your business onward, and you'll be able to see the growth and the seasonality of your business over time. Excel is not going to give you that. If you plan on being on business in the long haul, don't rely on Excel as your bookkeeping system. Get something like QuickBooks. Get yourself out of Excel and start saving time and money, because you're not going to be losing money on write-offs because of disorganization, by working in a software like QuickBooks. The other mistake I see is people having too many categories, or they don't customize their categories. And what I'm talking about when it comes to categories is how you are organizing and categorizing your sales and your expenses. So let's pretend I was a life coach and I sold one-on-one packages and group packages, and I had an online course. I would want to see in my bookkeeping system those three revenue streams separated out so that I could understand where my money was coming from, how I was making money. So that's what I mean about customizing categories. Instead of just lumping everything together as sales, you want to make sure you're intentional with the categories that you're setting up to organize your data. And then on the expense side of things, this is where I see people waste time, I guess I would say. Yeah, it's a time waster / it makes things more stressful when you have too many categories and you have categories that you're not even using. When you're logging into your bookkeeping system, you don't want to have like 5 different options to categorize something. You just want to have a super clear set of categories that you use for your expenses, like advertising, travel, meals and entertainment, insurance. For example, when you set up QuickBooks, it automatically gives you like 3 insurance categories. And I always tell my clients in Chillbooks, like, first things first, clean up all the categories. You don't need all of them. You don't need to see 3 options for insurance in your categories when you're trying to do your bookkeeping. So keep it simple with your categories and then customize them based on what you want to see. So what the strategy I teach my clients is to build their categories, and it's called the general ledger in accounting speak, or the chart of accounts. But you want to build those categories according to what CRA wants to see, so that they match directly with your tax filing, and then customize it for what you want to see as well. So what you can do is actually have the CRA categories as your base categorization, and then create subcategories within to help you see what you want to see in your financial data. So I'll give you an example here. Let's pretend like you are spending a ton on advertising this year. You've got meta ads going out. You have a firm that's helping you. You have your website costs, and all of those are being categorized as advertising. But you're like, I want to see how much I'm spending on meta ads. Well, what you can do is you can create another category that's a subcategory if you're using a bookkeeping system. If you're not, then I don't recommend doing this if you're using Excel, because it's going to make things more messy for you. But if you're using a bookkeeping system like QuickBooks, what you can do is create a subcategory that lives underneath the main category. That way, the meta ads roll up to advertising, and so advertising is the category your accountant uses to file your taxes, but you get to see what are my total advertising costs and how much of those are meta ads. So for those of you who are doing your bookkeeping, hopefully you get my drift with the categories here and what I'm talking about. I have a free resource for you that can help you figure out those CRA categories to start off with. It's called the Solopreneur Write-Off Guide. And if you comment right off below this video, I can send you a link to download it, or you can head right to the link in my bio and grab it. And this will give you the listing of the base categories that CRA uses, and then you can build your categories based on that. So that's what I got for you today. To recap, number one, keep your home office expenses outside of your bookkeeping system. Number two is Excel is not a bookkeeping system. Get yourself set up on a real bookkeeping system sooner rather than later. And the third one is look at your categories, otherwise known as your chart of accounts, otherwise known as your GLs, depending on who you're talking to, and make sure that they are aligned with how you want to see your financials categorized, and with how it's going to be easy for you to file your tax. And share this video with some friends who you think it might help. Bye for now.